Today I want to share with you an amazing trading strategy using the Williams Alligator indicator, and this indicator will allow you to take advantage of the bullish or bearish markets, and within those markets you'll be able to take high risk to high ratio trades with the strategy that I'm going to be sharing with you at the later part in the video. But before we get started, please make sure to subscribe to this channel, as this channel is currently new and I'm trying to post consistently. Your subscriptions are a great way to support this channel. So the market is always moving in one of these two phases all the time. It could either be trending upward or downward, or it could be ranging. The advantage of trending markets is that these allow you to ride the trend, and within this trend you can take a lot of good trades. But within the ranging markets there are a lot of stop losses, and you usually want to avoid these phases whenever the market is in ranging structure. So the difficult question is, how do you identify whenever the market is going to be trending or is it going to be ranging? And the Williams Alligator solves this problem because it was designed and it was developed in order to find when the market is going to be moving in either bullish direction or bearish direction, or is it going to be ranging. In order to apply the indicator to a chart, let's go towards the indicator tab and here search for the Williams Alligator indicator. This indicator is created by TradingView, so we can apply this chart, and it has, as you can see, that the Williams Alligator has applied these three lines onto the chart. Now let's go towards the settings of the indicator and see what's there. So in the settings of the indicator you can see that there is jaw length, teeth length and lips length. These lengths are basically in correlation with the Fibonacci retracement, which I'm going to talk about in a moment. But as you can see that the names are jaw length, which means that the alligator has a jaw and that jaw is very strong. So this blue line is actually a jaw line, and then there's this teeth line which is represented by this red line, and then there's this lips length which is the 5 exponential moving average or EMA. Now these lengths are very important because these are Fibonacci sequence, and if you're not familiar with the Fibonacci sequence, it is basically a number that is found in a lot of biological and physical phenomena in the nature, and it exists in almost all the fields of life. So using these Fibonacci ratios, we are able to draw these 3 exponential moving averages onto the chart, and these exponential moving averages are offset with reference to their jaw length. So jaw length, teeth length and lips length. For example, as you can see here, lips is offset by 3, teeth is offset by 5 and jaw is offset by 8. So actual exponential moving average, let's say at this candle, is being plotted at 5 candles after that, according to the settings of the indicator. Now let's go towards the style, and here let's change the width of these lines so that you can see them a little bit better. Now let's talk about how do you identify the trending and ranging markets using the Williams Alligator indicator. Whenever the Williams Alligator indicator is organized in such a way that the jaw is at the bottom, then there is this teeth and then there are lips, then it means that the market is in a bullish trend, and the further apart these EMA lines are, the more stronger the trend is. For example, here you can see that the trend started from here, and these exponential moving averages are crossing each other in a manner that lips are at the top and the jaws are at the bottom, and with the time the jaws and lips are moving further and further apart, and this trend is getting stronger and stronger, as you can see in this phase here. So with the formation of this market structure, it means that the market is in bullish strength, and whenever the Williams Alligator indicator is crossing these exponential moving averages, that means that the market is in a ranging phase, and we usually want to avoid this phase because during this phase a lot of stop losses occur and we don't want to be part of those stop losses. And for the bearish trend, the rules are opposite. The lips will be at the bottom and the jaw line will be at the top. As you can see here, there's this jaw line and then there's this lips, and in the middle there are teeth. Now according to the Williams Alligator indicator, it is representative of the real life alligator. For example, whenever the real life alligator is sleeping, then its jaws and lips are closed. As you can see in this case, the market is ranging and the lips and the jaws are closer together, meaning that the alligator is sleeping. But whenever the alligator is having its snack, then its lips and jaws are wide apart, and that can be analogous to the trending market. As you can see here, in the trending market, the lips and jaws are apart from each other, and the further apart they are, the stronger the trend is. Now that you know about how the Williams Alligator indicator works, let's talk about how you can take the long trades using this indicator. So the trading strategy that I mostly use with this indicator is the pullback strategy. For example, as you can see here, the bullish trend started at the crossover here, and then after that there was a minor pullback towards the teeth, and after this pullback the candle closed above the lips. So we want to wait for the confirmation, because if the candle touches the teeth and then goes below this jawline, then we don't want to take that trade. But if the market just comes back, touches these teeth, and then after that it moves and closes above the lips, then this is a signal to take long trade. So we'll open a long position at the close of this very next candle, and we'll be putting a stop loss at the last swing low, just below few pips or last swing low. And in order to exit out of the market, we want to wait for this lips to cross below this jawline. So we'll forward play the market, and let's see what happens. So as you can see, the same thing is happening here. We can also open another position at the close of this candle, but let's wait for this position to close and see what our profits are going to be. So as you can see here, the lips closed below this jawline at this candle here. So we can close our position at the close of this candle. So let me just move towards here, and let me move this upward. So this trade has been a profit of 3.7 restore ratio, which is phenomenal. Let's talk about how you can take short positions using the William Alligator indicator. The strategy for you taking the short position is same, but it's opposite. For example, as you can see here, the lips are at the bottom and jaws are at the top and teeth are in the middle. And again, with the start of this bearish trend, we want to wait for the pullback that would pull back towards the teeth, and then after that we want to wait for a confirmation candle to close below these lips. So once these conditions are met, we are good to take long short position, and then after that we can put our entry at the close of this candle, and we can put our stop loss at the last swing high, and we can wait for these lips to close above this jawline in order to exit out of the market. And let's go ahead and forward play the market, and let's see where that happens. So that happened actually here. If we go back forward, because if you remember, these moving averages are offset. So for example, if we are seeing the crossover here, it will actually be happening somewhere around here. So we can close our position at the close of this candle here, and then this would be our restore ratio of 2.11, which is again very good. But with this strategy, we'll be able to find a lot of winning trades that are high restore ratio. Now, another strategy that you can use in order to optimize your risk management is to break even the trade as soon as 1-to-1 restore ratio is met. That will allow you to take very less stop losses, and it will also be keeping your account healthy and active. Now let's look at how this indicator allows you to avoid the stop losses and the ranging markets. As you can see here, during this phase, the Williams Alligator indicators, jaws and lips are crossing above and below very frequently. So during these crossovers, you can see that the market is moving upward and downward, and it's moving actually inside a range. And within this range, the market is headed towards no direction. And usually we want to avoid this situation, because during these crossovers, a lot of stop losses are being hit. So that's why we don't want to be part of the stop losses, and we'll be avoiding these trades. But when we see a clear trend forming in the market, and with this pullback, we can take another short position here. So using this strategy, you'll be able to detect whenever the market is trending or whenever it is moving in either bullish or bearish direction with a range after arranging market structure. So this is how you can use the Williams Alligator indicator to your advantage, and this is how you can use this trading strategy in order to maximize your profits. I hope you were able to understand how this indicator works and how you can take long and short positions. If you have any questions, please comment down below. I'd like to answer them. Also, don't forget to like, share, and subscribe. See you guys in the next video. Thank you.